The Federal Reserve is expected to announce another round of interest rate hikes tomorrow. It comes as the central bank faces calls for accountability amid the collapse of multiple banks this month. And that includes First Republic Bank, which is seeing shares tumble dramatically despite the bailout from rival banks. Ed O'Keefe is following this story for us from the White House. Ed, it is good to see you. I think that a lot of people, we're learning a lot about how banks work and how the Fed has an influence on the banking industry. But I think people still need some clarification. How does the Fed raising interest rates tie into these crashing banks?
You mean how is it crushing the banks, or how is it affecting those banks?
How is it affecting the banks? Yeah.
Yeah, because they bought into Treasury bonds that basically were better bets or better investments when interest rates were lower, and now that they're higher, they're just not worth that much, and so there's a concern that as you raise interest rates to cool the economy overall, you could be affecting these banks that maybe had invested too much in those kinds of bonds. That's part of it, and that's why you're seeing now, just in the last few days, Wall Street analysts and even Goldman Sachs yesterday basically saying they expect, it's more like they hope, that the Fed won't raise interest rates again when they meet today and tomorrow, or if they do, they'll only do it at a modest quarter percentage point. Because they've seen what obviously the effects of their decisions in the last few weeks. But the Fed today and tomorrow will be working on whether or not they need to continue doing so, whether they have to worry more about these banks or whether they need to worry about the economy overall. Of course, inflation has been going down month to month in the Consumer Price Index reports. That was the idea here. And we'll see once they announce tomorrow whether or not they opted to increase them again or hold off at least for this month. Given the instability in the banks.
Yeah, it would be surprising because we know that what the Fed chair wants to get to is 2% inflation, and we are a long way from that. Last night on Red and Blue, Senator Mark Warner of Virginia weighed in on his thoughts on Jerome Powell's handling of the banking situation. Here's what he had to say.
I believe that Jay Powell has managed this inflation issue fairly well, tough on both ends. He gets grief from both sides. And frankly, the fact that he, along with the Treasury and with the FDIC, came out with those emergency efforts to guarantee depositors, to make sure your money is safe in these banks, and some of the other tools, I think made sense.
So he's expressing confidence. Some other lawmakers have been pretty openly critical. What are you hearing from lawmakers about how Jerome Powell has been handling this?
Yeah, there's a mix. I think Warner there is certainly hugging the middle. Some of his biggest critics, like, of course, Massachusetts Democratic Senator Elizabeth Warren, are calling for his ouster, calling for the ouster of some of the regional Federal Reserve chairmen as well, the one in San Francisco most especially, because they oversaw Silicon Valley Bank and may have been aware of its troubles as early as last year, according to some reports. There's no reason to think that Powell's going anywhere because there's not enough of a groundswell of political opposition to him. And ultimately, it is a quasi-independent situation over there, and the president nominates a chairman. So if the chairman were to go, the president would have to pick somebody else. And for now, the White House seems to have confidence in him. So, you know, if anything, this is politicians looking for a scapegoat, and there are those that don't like Powell to begin with, disagree with his policies, and see this as an opportunity to raise those objections again. But I think, as Warner said, he's taken it from all sides, Powell is, and that just comes with the territory.
So one of the words that I've learned over the last week or so is contagion. And, there's been a lot of talk about whether or not problems in one bank could spread to another bank. But it's not just about sort of the issues that the banks are dealing with. It's about how we feel about the banks, whether or not we feel secure. And that type of contagion can also have a real world impact, right? So this is the job of the White House, right? To reassure the public that the banking system is stable, except at least for the past week or so, every other day we've woken up to hear about some instability within the banking system. What is the White House doing?
Well, yeah, and it's not just the White House. It's certainly the banks themselves and its broader economic leaders that can influence people's feelings on it. Contagion certainly was something we learned about during the pandemic. So economic contagion certainly is what we've seen here in the last few days. And they're worried about panic setting in. And so to that end, this morning, the Treasury Secretary, Janet Yellen, is giving a speech to the American Banking Association. And among other things, she's going to clarify that the reason that the federal government stepped in the way it did wasn't just to aid those two specific banks, Silicon Valley Bank and Signature Bank, but, quote, our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion. So in essence, it's straight talk from her. She's saying, we may not be out of the woods quite yet. This isn't over. But what we did and what we've been able to hold off in the last 2 weeks is a broader contagion, a broader run on these kinds of banks. If we see it again, however, we will do something similar on behalf of those smaller regional banks that may suffer. First Republic, obviously, is one example of that. We've seen in the last few days Goldman Sachs and other banks step up, inject about $11 billion into those smaller banks, into First Republic specifically, to sort of just give it some liquidity. There's some talk about whether one of those bigger banks needs to outright buy the bank or at least invest in it. Treasury Department can have some influence in that, but ultimately it's up to the private sector to decide. So she's today trying to explain, look, we've done what we've done so far. We think it's held it off. We're not necessarily out of the woods. We'll do it again if we need to.
Ed O'Keefe, thank you so much. I got to tell you, Ed, the rising sun is working for you. This is golden hour magic right here. You look great.
It works for me, but my poor cameraman, Bart, worries every morning about how it can change things. It's a very unique time of year at this unique angle we have. That, yes, it gives us an angelic glow, but can drive cameramen crazy. So, and we appreciate Bart's good work because of that.
Yes, we do. Thank you.
Take care.